What's going on, traders? Well, what the heck? It's not even showing my my camera isn't working. All right, well, I'm going to be sharing my screen. I'm not even sure if you guys could actually see me or not, but I can't see myself. I'm going to start sharing my screen so you guys can see exactly what it is that I'm looking at. But pretty much, I want to talk about today's trading. I do want to shout out a couple traders within our Technical Solutions group chat. But first of all, let me talk about today's today's biggest trades for the group overall. So let's go ahead and go right here, and it was CYTR. So as you guys can see by the cover picture, it pretty much talks about how traders were able to make 20% plus today, and these were numerous traders that DM'd me their profits today, and it was due to a lot of them told me that it was due to the awareness that they were given because of our Sunday stock talk and stuff like that. So what that means is yesterday we had a recap that pretty much we have every Sunday at 6:30 Mountain Standard Time. I ran a little bit late, about 20 minutes, but regardless, we talked about the top stocks. And again, this is 100% all your guys' work. All I did was within the Technical Solutions Facebook platform. Again, the link is provided for you down below if you guys want to join. All I did was, let me go ahead and search the poll in the search bar. So I put, list the top 5 stocks that you guys would like to talk about this week for today's, this week's Sunday stock talk. The top stock was CYTR, and now I understand why. Why was CYTR such, a desirable stock? Let's talk a little bit more about that. I want to be 100% clear and simple. I personally did not trade this one. This is one that we did talk about right as the market opened. If you guys didn't watch my live video for today, go ahead and check it out. It's one that I just recently uploaded. Let me go ahead and focus just on one. All right. What the heck? Let me move this. There we go. So let's make it simple. So let's go a little bit further back. And the reason I believe CYTR, came across to be so desirable and came into like all of our scanners was because of this huge increase that CYTR had. I did an analysis on this one, and simply what it came down to was that it had a huge rise from its support at 50 cents all the way up to its resistance at 95 cents. It hit that resistance at 95 cents twice. So we know that that's a valid resistance. So I'm just going to draw a little trend line right there. Right there. All right. Let me focus a little bit, or let me get a little bit closer. Let me just do a 2-day analysis. So this is where it peaked out at 95 cents. And during aftermarket hours for CYTR, again, this was Friday, had a huge drop all the way from the 95-cent resistance all the way to that 55-cent support. Although the support was at 50 cents, this is exactly what it is that we talked about in our Sunday stock talk. We talked about pullbacks. And what does that mean? Well, it means like once a stock ends up having a huge drop or even a huge rise sometimes, during the pre-market hours, some people can't trade pre-market, nor can they trade aftermarket hours. So some of the people that held overnight over here ended up being way down here. So they lost from, where it ended up closing at, or is that 81 cents, all the way down to where it opened at 62 cents, lost 22%. A lot of them just wanted to cut their losses, and a lot of them were able to do that right before this huge drop. Again, this is called a pullback, and what I mean by that, again, is this huge drop, and this is, a 5-minute pullback, and then it had a 5-minute green candlestick. So let's go to 1-minute candlesticks and talk a little bit more about it. So the reason that I found this one so attractive, but the reason I didn't day trade it was because I was focusing on 2 other stocks. And again, don't overwhelm yourself. Yes, I missed out on this one that a lot of people were able to profit off of, but one of the #1 rules that we try to, in a sense, just express within our group is don't overwhelm yourself. If you're focusing on 1 to 2 stocks and you have a plan that makes sense for those 2 stocks, then focus on that, regardless of what it is that can be trending on the side. The more you add to your plate, the more overwhelming it can be. And yes, you can miss out on certain stocks, but you can also make mistakes, and that's very simple. So we ended up catching this right at 66 cents, I believe. We caught it I believe right before it hit the 70-cent resistance. It had a pullback all the way to 63, and I caught this all in my live stream. We caught the alerts as CYTR was dropping, but the reason that I found this one to be so desirable was it had a previous support at 55 cents, and in this pullback, it dropped down all the way nearly to 50 cents. How did we know that it was going to drop to 50 cents? You might ask, right? That's a pretty easy question to answer. Well, why did I know that it was going to drop to 50 cents? Again, this pullback, one of the first candlesticks. Well, it previously had a support, maybe like 5-10 days ago, had a support at 50 cents, meaning that it held above 50 cents pretty well. So what does that mean? Well, there was a support over here at 50 cents. So if it's dropping very heavily because of all this hype that it had, where is it going to stop and bounce at? That's the whole point of pullbacks. Identify the bounce, wait for it to start rising back up, and then that's when you decide to jump on in, set up a plan. And that's what a lot of our traders ended up doing. Not jumping into the hype, not jumping into hoping for the best, but understanding what's going on. They understood the support was at 50 cents. The reason why was because they went back and simply did an analysis. No scanner, nothing. You simply do an analysis, identify the support at 50 cents. There was a previous resistance at about 55 cents. So like we know, old resistance become new support levels. So maybe that's why it bounced at 60 cents first, and then it bounced during pre-market hours today at 55 cents. But regardless, that's why we found the support at 55 cents. It bounced a little bit above that, but it doesn't even necessarily need to come down to you always, understanding where it's gonna bounce at, right? It's best to know the most you can about it, about whatever it is that you're trading, but just focusing on this. Let me change the candlesticks. Just focusing on this, the bounce here that it had all the way down to 51 cents. And once it bounced, understanding that, okay, well, 50 cents is the support. So as it starts, what I like to do is not to worry about getting in at the lowest price as we were when we were trading, what was it, FTR, or it was like CYTR. I'm not too sure. I'm going to have to follow up with that one. But it ended up, what you have to wait for is for the bounce. The reason you want to wait for the bounce is you want to make sure that you invest your hard-earned money, regardless if it's $100 or $10,000. You want to make sure that you invest your money in something that appreciates in value, that shows signs of upward momentum. How are you going to do that when all these candlesticks are red? When everything is telling you that it's dropping? Yes, the support is at 50, but is that 100% going to happen, that it's going to bounce there? No, you never truly know. And you have to understand, 90% of people lose money in the stock market and only 10% make money. So how is it that 10% are profitable? It really comes down to understanding what it is that you're trading and managing your risk. So understanding that it bounced at 50 cents, right? It bounced at 51 cents regardless, right? You don't have to get in at the lowest price. Simply, wait for it to start showing signs of upward momentum. This EMA line didn't show that it was really going above EMA until 57 cents. If that's one of your rules, that you don't want to get in until it goes above EMA, then so be it. Stick to your plan and make sure that every stock you trade meets your criteria. Never jump into anything based on hype or based on anyone else's opinion. So again, a lot of these traders were able to analyze the bounce, saw signs of upward momentum, and then started to jump on in around 55 to 57 cents. Once they jumped on in, where is the resistance at? Well, the first resistance was at about 65, 64 cents. The second resistance was right around 68 cents. And then we caught that when the resistance was at 70 cents. But for the pre-market hours, there was also a resistance, as you guys can see right here in this area, a resistance at 68 cents. So if it used to have a resistance during pre-market hours at 68 cents, it's most likely going to experience somewhat of a resistance, and it received somewhat of a pullback. And I could have gotten in at the bounce because we actually caught this all in camera. And the reason I know that this could have been a bounce was because, again, this was an old resistance, as we caught it here at 64 cents. So like we know, old resistance levels become new support levels. So it ended up doing the same thing and then simply bouncing right there. Bounced at 64 cents, broke the resistance, first struggled to go above 67 cents, had a little pullback, and started bouncing on this EMA line. If you guys see, it continued to bounce. All these pullbacks continued to bounce on this EMA line. Eventually ended up hitting a resistance at 72 cents. A lot of traders just started locking in profits at 70 cents. Why did they not care or try to squeeze in the most profit they can? The reason why is because they're smart. A lot of our traders understand that it's not about the most profit that you can make, but understanding that every time you choose to invest in a stock, you should know where it is that you're going to be buying, where it is that you're going to be selling at, and where it is that you're going to be cutting losses. So if I identified the support at 51 cents, right? 51 cents. I bought in at, let's say I bought in even here at 54 cents. I buy in at the first bounce. It starts going up, and all of a sudden it takes a dip. I'm going to have my stop loss set at 51 cents regardless of what I believe, because I know that the support is at 51 cents, and if it drops below that, that means it broke support and it's most likely going to see a downward trend. Fortunately, it didn't do that, but that's the whole point of trading, minimizing and managing your risk and promoting growth. So it ended up continuing to rise, and understanding that they knew that based on the pre-market hours that there was a resistance at 68 cents and an overall resistance at 70 cents. So regardless of what it is that they were hoping for, they didn't get greedy and they locked in profits at 70 cents. That's what a smart trader would do. Know where they're buying, know where they're selling, and know where they would cut their losses if all of a sudden the stock took a dip. It continued to see a downward trend after that, so a lot of traders might have been able to catch a little bit at the bounce, but that's a lot more risky, especially when you're catching it on a downward trend. And overall for the day, ended up having a pretty solid bounce at 56 cents again, and had a resistance at 64 cents. So it still gave you, even during aftermarket hours, or even throughout the day, about a 12% percentage of growth. But overall, from the bottom, right where we expected it to bounce at 50 cents that we talked about during our pre-market hours, and from the top, that saw a almost 30% growth for CYTR today. Although CYTR closed at 33%, we don't care about where this penny stock closed. We don't care about, if it's having a red day or a green day. All we care about is identifying where the pullback is going to bounce at and trying to maximize our profit without being greedy, meaning that before we jump in, know where we're buying, know where we're selling, and know where we're going to cut our losses, and sticking to the plan regardless of what it is that you believe might happen. Because the more emotions you get to put into your trades, I really believe the more red days that you'll experience, because it's not about emotions when it comes to trading. It's about what the graph and what the stock is telling you, and you using that, you using that analysis to, in a sense, get a better understanding of what it is that you're investing in. And that's why I believe so many of our traders were so successful today, because of all the profits they were able to lock in today. Let's go ahead and see what everyone else is saying. Let's see. So people are saying that they're crediting me and stuff like that. And there's a member within our TechBudget Solutions group chat that had a really good day. And let's go ahead and see where that is. So his name was Austin. He was like, "How cool is it, Ricky, that you are changing people's lives because of their entire family?" I think that came down to a lot of people locking in their 20% profit and stuff like that. And then we had another member just talking about how on CYTR they were able to lock in pretty solid profit. And what I responded was, I responded this. I was like, "Austin, I have to say it's one of the best feelings, but honestly, I'm simply providing a platform. So that means my platform of TechBudget Solutions, which is a free platform. It's the individual himself or herself that is making the change for his or her family. We have a lot of hard workers here. I'm simply here to spark the interest." So what I mean by that is I didn't tell anyone what to trade, nor will I ever tell you what to trade. So when people ask me, what should I trade or what should I look at? You should look at what you identify potential in, what you see value in. If you're asking me that question, then you obviously don't understand trading or investing too well. Because if you have to ask someone, is this a good deal? Should I invest in this? Then you're going based on someone else's opinion, and that's the #1 rule that will lead you to be the 90% of people that lose money. Although that might be somewhat, mean, or however it is that you want to visualize that, the stock market is not, a market that you can just hope for the best in. It's not where you get lucky. It's sometimes you might get lucky, but in the long run, if you want to treat this as a career, it comes down to you understanding what it is that you're investing in. And if you don't, there's nothing wrong with not knowing yet, but know that you're going to have to put in a lot of hard work to understand how to invest. And if you don't know how to find a good stock, or don't know how to identify potential, like how we did with CYTR, then that's going to be the first thing that you're going to want to learn. How is it that we identified this potential? All we waited for was a pullback, waited for the bounce, set up a plan on where we're buying, where we would sell, and where we would cut our losses, and that's it. It's really that simple. But it comes down to the simple things being so difficult, because I can promise you those that ended up jumping in at, let's say, 53, 54 cents, were not selling because they were hoping for the best. A lot of people experience that. But you have to understand, every time you buy in, you have to know where you're selling. And one of the biggest things is I talked to a trader today that said he saw or experienced a big loss, and it was because he bought closer to the resistance. And then he ended up stop lossing out at a much lower price. 100%, that's a very common mistake that a lot of people make, and in no way, is that necessarily a bad thing. But it really comes down to understanding that when you're jumping in, you have to take everything into consideration. You have to understand that you have to use different indicators to identify, that it's a good buy. You don't have to, but it's recommended, right? Getting a better understanding that you're getting in at a good buy. Understanding where the support, understanding where the resistance level is. Making sure that you're not getting in too late, like we almost did when I tried to buy in at around 66 cents. I saw right away, oh crap, the resistance is at 68 cents because of the pre-market hours. Maybe I shouldn't get in. And right as I did that, it hit 68 cents and then saw a pullback. It bounced at 63 cents. I waited for 2 candlesticks that were green, and it started showing signs of upward momentum. If I would have gotten in, that would have been from the top to bottom. Even if I would have sold, because I would have sold at 70, I would have not known that there was a resistance at 72. I would have sold at 70. That would have been about almost 8% profit. That's huge. For this $1,000 to $20,000 challenge, you need to lock in 2.34% profit on average every single day. Is that difficult? That is difficult, especially with this PDT rule. And I'm going to say firsthand, for someone that never really had to experience that, because I had, over the $25,000 limit that you had to have, it's very difficult sometimes to cut losses or to sell, because you want to make sure you maximize your profit. But I'm telling you, in the long run, cutting losses short and managing your risk and locking in profits consistently in the long run will be what leads to your success. You can do whatever it is that you see value in and trade whatever it is that you solely see value in. But in the long run, consistency is key to success when it comes to anything. When it comes to being an athlete, when it comes to being successful in school, when it comes to being a good worker, when it comes to being a good day trader, when it comes to being a good investor, consistency and discipline are one of the key components in being successful, and you have to understand that. So that's enough for CYTR. I just wanted to talk to you guys about it, on why we did so well today. And let me go ahead and see if I can actually shout this guy out. So I hope he's okay with it. Okay, so he said absolutely. So it looks like I asked him if it's okay for me to shout him out, and he said absolutely, you can shout me out. My last name is pronounced McCutcheon, like Mike McCutcheon. Okay, perfect. Please let me know when the video that you do a shout out. Okay, well, I hope you're watching right now because we're shouting you out. But Joanne Trans posted a comment asking about about it on Friday within the TechBud Solutions wall. So he found about CYTR because I asked him how did he find about CYTR. I just wanted to get a better understanding. So that's what drew my attention, like you talked about in the Sunday Stock Talk. Again, we talked about it in our Sunday Stock Talk. Trouble is, I don't know how to find the stocks like this on my own. So one of the biggest things that I can say that can assist you guys in finding, healthy stocks like this, or stocks that see a lot of volume, is simply adding as many stocks that see healthy amounts of volume, so high volume as in this, right? That don't just see a bunch of dashed lines or just little crosses. Adding healthy stocks with a lot of volume, usually that I like them to be above 50 cents, and just add them to your watch list, just like I have, all these stocks right here. We talk about numerous stocks every single day within our group chat. I simply add them to my watch list. And then when it comes to dedicating the 10 to 15 minutes every single day, or 15 to 20 minutes every single day to identify potential in stocks to plan to trade tomorrow, you have to understand, you have to make sure you do your work. When you're performing your technical analysis, like we've done before, use the prime berry pick checklist to focus on 5 to 7 stocks that you'll reanalyze during pre-market hours. So what I mean by that is, out of all these stocks right here that you've gathered, it's going to be extremely overwhelming to follow every stock, right? So filter out 2 to 5 stocks that you're going to want to follow up with during pre-market hours and focus on those. So now that you have 2 to 3 stocks that you've identified that have potential for the following day, during pre-market hours, as in this time frame right here, you'll see how they play out and see if they're playing out the way that you did. Now by then, you'll probably have 1 to 2 stocks out of your 5 to 7 stocks that now you're going to be focusing on. So now those 1 to 2 stocks are the ones that you're going to be focused on. But it comes down to exposure. And this group, this free group, is a great way for exposure because of all the stocks that we talk about within our community, within our platform. And it's that simple. You're exposed to different stocks every time that we talk about something within the group chat. Add them to your watch list. In no way should you ever trade based on anyone else's opinion or anyone else's suggestion. Again, it comes down to you during your analysis period that you identify potential, set up a plan for each and every single one of them, follow up with them during pre-market hours, and then stick to your plan when you plan on trading them. But it comes down you to the investor to be exposed to these stocks by talking to other people and networking, identifying the potential yourself, and then planning out your trade, and then sticking to that trade when it comes down to our actual play time when the market opens. And that's really just it. So I hope I answered your question, and I hope you're watching. If not, then I'll go ahead and message you right after. But let's go ahead and talk about my trade with AMB. I locked in profits, as you guys saw right away, at 1090. Ended up hitting highs of what the heck? We're over here. So this was my hold. I ended up getting in at an average of 1070. I ended up averaging up as of on Friday from 1060. So it bounced. I got in at 1060, average at 1070. So that was a solid support. And then today I sold at 1090. So I didn't get out at a very good price, but it made sense to me because the resistance on Friday was 1090, and that's why I sold today. Although it did scale up a lot more than I expected. I could have not predicted that. I did miss out on, what is this? Let's see, from where I sold. That's about 4% profit, and a lot of people would be like, holy crap, that's, man, I missed out and stuff like that. Dude, don't like stress yourself out on something that you had no control over. You locked in consistent profit, and that's it. I feel great about my trade, and it was with my, Robinhood account, and that's great. I stuck to my plan, and in the long run, I know that it's going to pay off. I locked in a little bit over, a little bit under 2% profit. Again, not huge, but profit's profit, and that's what you guys have to understand. Now, with my trade with FTR, I ended up stop lossing out at 128. I talked about during my analysis video or my live video this morning that the support was at 129 to 128. I put my stop loss right below 129 when I got filled, but it dropped below 128, and then I ended up cutting my losses. And it was that simple. I stuck to my plan. Yes, it bounced back, but it bounced back to 128. So again, I didn't really miss out on much, and it went down to 126. And although that might not be much, that's like 2% profit. So I would have almost given back all the profit that I made today. But it came down to, again, a very simple concept. I identified potential. So what I mean by that is if we go a little bit further back to a 5-day analysis, FTR made sense to me at a solid bounce at 128, meaning that it used to bounce very well at 128 with the resistance at around 136. So that potential for profit, again, was worth it for me. Again, I ended up losing money today on FTR, but the potential for profit, about 5.8%, was worth the risk for me, rather than the potential for loss with my stop loss at 65 cents. But it came down to me not being too worried and me being confident about my trade because I knew where I was buying and I understood that it was a good buy. I knew where I was selling because I identified it was a realistic resistance that I can do within 1 day, as it's done it before, as you guys can see numerous times. And my potential for loss, I knew I would cut my losses, so I knew my potential for loss wasn't that huge. And it made sense to me, and that was it. I only need it to make sense to me. I don't need anyone else to tell me if it's a good or bad trade. I'm always open-minded to other people's trades, and obviously this one didn't see huge amounts of volume, but it's one that I felt like I understood pretty well, and the risk wasn't that much. One that I'm probably going to want to focus on tomorrow that was being talked about within our group a lot today. Let me see if I can actually find it. Where is it? Right. My goodness. NAK. Wait, first of all, I want to talk about NAK. This was also one that we talked about. Let's see if I can actually pull it up. Within our Facebook platform. So CYTR, AMD, that's the other one that had huge profit today that I sold at 1090 for profit, but ended up hitting highs of 1134. NAK, we talked about it in our Sunday stock talk. Dude, huge. Look where it opened at. We saw this one during our live trade. Went from 155. Look how huge that is. Look at that potential for profit. So many people traded this one within our group. Did I tell them to trade it? Heck no. I would never tell you what to trade. 15% profit on this stock from top to bottom. Again, and realistically, you probably didn't catch it from top to bottom, but just identifying, what makes sense to you and identifying potential and being exposed to opportunity, that's what it all comes down to. The last one that I wanted to talk about, man, it's not even here. JNUG did well today from the bounce that it had at like 1644, I believe. ECYT. I saw this one being talked about within our group chat. ECYT. And the reason that I think this one has potential personally is because of this huge gap that it's created, this huge drop. It didn't do very well today, but it didn't do as bad as I thought it did. After I had this huge drop that we captured, I was thinking of getting in at 160, and I probably should have. I was thinking of getting in with my Fidelity account because I didn't want to use my day trade that I had with Robinhood, just because I didn't feel like the risk was worth it. And something that I'm trying to do now more is trade with my Fidelity account first and then my Robinhood account, just because I don't have to worry about my day trades with my Fidelity account. But it hit a resistance at 179, and from the bounce at it hit lows of 165. But again, I would have not bought in at 165. I would have bought in when it went above, right here, above 170. What the heck? I would have gotten in when it went above 170. Why? Because I want to make sure that I'm getting in when it's going up. And understanding that I should have gotten in at 170 because that risk was worth it for me. I would have gone in at 170, would have cut my losses anything below 170. And I knew the resistance was going to be at 178 based on this, at 176. If you go 5 days back, sorry. If we, no, yeah, right here. If we go a couple days back, when it had this huge drop, 176 was the support. And like we know, old supports become new resistance levels. Again, a very simple concept that you have to understand. So where would I have sold? I would have sold at 176. So that potential for profit from 170 to 176, that's a trade that I should have done today, and that was my mistake in my area of opportunity. And that would have been 3.5%. Again, not enormous like everyone else that locked in huge amounts of profit. But again, realistically, it's that consistency profit and managing and minimizing your loss that's going to lead to your success. And that's my area of opportunity. If you see how solid this support was at 175 and how solid this resistance was when it was at 176, it honestly looks like a solid bar. Obviously, it broke a little bit above it and then it went back down. But look at this solid support at 175. So if it holds above 175, then this could be a good trade following tomorrow. Again, do your own analysis. Make sure, please, guys, today, whatever stocks are on your watch list, at least dedicate 15 to 20 minutes to identify potential and then share it within the group. Share it within the Facebook platform. Share it within the technical analysis feed and share it with one another. But it comes down to you as the investor to identify that potential and to make sense of your trade. Plan out your trades, where you're buying in, where you're getting out, and where you would cut your losses, and stick to that plan. Consistency is key, and minimizing loss is going to be what's going to lead to your success. So I hope you guys enjoyed today's video. Let me see if I can answer some of your guys' questions. Okay, so it says, Justin Carr, I normally use 20% of my total account. Never do I hold the whole thing, never 50%. That's just me. You know, that's a good thing. Michael says, thanks, Ricky. Thank you, bud. NAK kept moving up, dude. 100%. I know it definitely did. NAK kept moving up, and you know, is it going to continue to move up tomorrow? 100%. We don't know, but you know, can you plan out a trade or plan out, you know, a plan that can lead to your success? Definitely. Other than that, you know, it really comes down to you and whatever it is that you understand potential in. But other than that, that is pretty much it. So Dimitri, what's going on, man? Do you use SMA or EMA? I'm using EMA now. So what I simply did, for those that want to see what it is that I do, is you click on Edit Studies, and I put Legacy EMA. So you simply just search up EMA, and then when you add it, just make sure that you add it to your price. I don't think I showed you very well. So when you add EMA, it's going to go in some random column. Just make sure that you like drag it into this price column, and then it will reflect right on top of this these candlesticks. But other than that, that's it, guys. I'm going to dedicate 15 to 20 minutes to identify potential in my own time. But again, do your own work, do your own research, plan out your trades for tomorrow, and then share it with the group. And make sure you continue to help one another out any way that you guys can. Other than that, if you guys can like and subscribe, you know, we greatly appreciate it. Again, we're going to be going live tomorrow for pre-market hours, and you'll probably capture the first 30 minutes of my trade. We're nearly hitting now 21,000 subscribers, but again, I do want to thank you guys for getting us over to 20,000. And if you guys like this video or feel like someone can benefit from it, please share it. And as well as if you guys want to suggest any video, please direct message me within the TechBud Solutions group chat. Again, all the links are provided for you down in the description. Just feel free to direct message me, and then we will go from there. But other than that, you know, it really comes down to that. Why can't I find the Facebook group? Chad, again, the link is provided for you in the description of this video. Other than that, everyone's saying thank you. No, thank you, guys. Other than that, I mean, we are good to go. Did you buy any of Tim Sykes' programs? No, I did not. I'll do my own analysis. If you guys want me to do analysis for you guys personally, feel free to direct message me. But again, please make sure that you do your own research with whatever it is that you invest in. Like always, guys, let's make sure that we end the year on a green note. And it doesn't even look like my screen. I don't know if you guys can see me or not. I can't see myself. So hope you guys take care and enjoy the rest of your day. See you later, guys.